Good evening and welcome to the Earnings Review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from our Hampton Studios in Harare, Zimbabwe. I'm Ibn Mabunda, your money man. On the show, we engage top echelon executives to get you up to speed with first-hand information. We also chat with the most competent analysts on the market just to ensure you're furnished with relevant and comprehensive market analysis. Tonight, we focus on Reozim, a diversified as well as a listed firm on the Zimbabwe Stock Exchange. Now, let's get into some teensy-weensy where the operations of the firm are concerned to get you up to speed with how the firm is faring in the Zimbabwean waters. Now, Reozim is an integrated mining company that has a diverse portfolio of metals under its wings, among them gold, diamonds, coal, base metals, chrome, and of course the list is interminable. The company has several subsidiaries that helps it push its agenda. Let's get into their timeline for just a moment. In 1956, mining operations began with the firm being incorporated as the Rio Tinto Southern Rhodesia. At that point, the firm was organized into nickel as well as copper mining operations in Kadoma in the Midlands province here in Zimbabwe. From its first days, the firm has continues to grow and expand its footprint as well as its operations across different mining segments. In 1969, the firm would list on the local bourse, and in 2004, Reozim was separated from its parent Rio Tinto and became a wholly owned subsidiary here in Zimbabwe. Now let's get into how the firm is organized. It runs through 5 key business units, which are Rio Gold, Rio Base Metals, Rio Diamonds, Rio Energy, as well as Rio Chrome. To swim a little bit deeper, Rio Gold has 2 key units, which are the Renko mine in Masvingo, southeast of Harare, as well as the Cam and Mortar mine in Kadoma in the Midlands province of Zimbabwe. The gold segment develops and mines gold that is sold as the gold bullion. Where the Cam and Mortar gold mine are concerned, the firm actually has over 1,200 hectares of land from which it extracts this very yellow metal, which is of course gold. Rio Base Metals, the firm has operations through the Empress Refinery in the Midlands province of Zimbabwe. Onto Rio Diamonds, the firm has a 22% stake in the Murowa Diamonds in southern Zimbabwe. Rio Energy, the firm has a 50% shareholding in the Sengwa Colliery, which of course is known for its capacity to generate energy in that regard. The firm also has investments in Rio Chrome, where it intends to get into chrome mining as well as the smelting industry. Some vital statistics that relate to the firm: Zimbabwe generates most of its foreign currency receipts from the mining sector, which account for more than 50% of its forex receipts over the past 5 years. With a current share price of 921 cents, Reozim has a market cap of 1.1 billion Zimbabwean dollars. The share price has mounted 300% since the year started, vis-a-vis a materials index that is up over 750% since the year started. Comparatively, the ZSE All Share has mounted over 560% since the year started. Now, this concludes the Halaju section of our show tonight. In just a moment, we get into an analysis of the firm in light of a recent annual general meeting that was held by the firm. Now, don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure, and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Thank you for staying with us. We are discussing the operations of Reozim, and to discuss that, I'm joined on set by the Chief Analyst for Equity Access, Respect Kwenzi. Respect, good evening, and thank you for joining us on the Earnings Review.
Thank you, Eben. It's my pleasure.
Fantastic. Now, Respect, this conversation is coming in the aftermath of an annual general meeting for Reozim, wherein the new chief executive, Mr. Manit Shah, gives detail with regards to some of the issues playing out with the miner, as well as a presentation of results where he zeroes in on their 2019 performance vis-a-vis their performance for 2018. For just a brief moment, I want us to look at their performance in 2019, but we will not zero in as far as the millions in Zimbabwean dollars, as that may not have relevance in terms of the calculations at this point. But perhaps what is important would be the production figures thereof. Let's have a look.
Production highlights for the year. Two main events that affected all our operations across the group. One was incessant ZESA outages. There was a time when we were having outages of as much as 18 hours in a 24-hour day, and that lasted for several months. So power outages was a major factor, and the other was towards the end of last year, 2019, we moved our ore source at the biggest operation, Cam and Motor, from the Cam pit to this new one-step mine, and that mine, as I just was informing you, was at a grade less than half of the Cam grade. So those two factors combined, because of those two factors, our production was 7% down compared to the previous year for gold. For diamonds also, similarly, because of ZESA outages mainly, our production was lesser compared to last year. We produced about 667,000 carats this year compared to 740,000 carats in 2018. And similarly on the base metal refinery, which was anyway under care and maintenance. And we are using some of our tailings, and we smelt it in our smelter to get some metal out to meet our care and maintenance expenses. And the smelter is a heavy consumer of electricity. And because of those outages, even the production, even at the refinery, was much lower compared to 2018.
And that, of course, was the chief executive for Reozim, giving us details in terms of how they have fared, particularly up to this point. Of course, they with their thrust as well as a focus on their 2019 performance, where he alluded to the fact that there has been a decline with regards to volumes in terms of output across the board. Gold dipping 7%, the base metals dipping by over 300%, as well as the diamond output narrowing there by about 10% plus or minus. Can you give us detail as well as your perspective with regards to this very development?
So the background there is, it simply refers to aspects of production, and I think most of the processes around Reozim are no longer up there. So they need to upgrade their plan. They need to possibly even put in a new investment altogether. They've had consistent breakdowns in terms of the production, in terms of the plant. So I think that they really have face a deficit in terms of their plant. But also to look at some of the challenges that they faced in that respective year. Obviously, there were power challenges which were quite rampant across the economy. And they had to be at the brand because their production is dependent on availability of electricity. But also their plants were constantly also breaking down. Their argument is that if they could have accessed part of their foreign currency earnings, they could possibly at least have invested a bit in terms of refurbing or even buying spares for the plant. But they could not, they could not access adequate funding, and therefore in certain periods they had to shut down their operation. At some point they even had to put out a statement in the public domain that they had to suspend production because they're now incapacitated. They can't meet their working capital challenges. And obviously I think all these matrices, they speak to an investment that is not as stable. I think that it's high time the company looks at redoing its whole processes, investing in new plant and equipment, and I think that can reposition it. So that 2019 performance is on the background of an adverse currency situation, also electricity challenges, and the company's failure to recapitalize and to redeem its production processes.
Fair enough. Can we zero in just for a moment where their base metals are concerned, which saw a 300% decline? And I know that in just a moment we'll be getting into their half-year performance to the half-year of 2020. How significant is their base metals unit? I know this is where they do the refining and there is nickel processing and things like that. How important is that unit to the group?
It is quite insignificant in terms of contribution to revenue. It's not really up there. But I think for 2018, which is the relative forecast period, it was coming from a very high base. So if you look at the nickel processing, presently they're not even processing anything. And for 2019, it was mothballed. So there's quite an insignificant contribution coming from there. And because there isn't much that goes on there, coming from 1 to 0 would give you 100% decline in terms of change. So I think it's about the relative contribution there, and that's why we are seeing this drastic loss in terms of value or volumes coming from that unit. But it is quite insignificant in terms of contribution to the overall group revenues.
Fair enough. Now, to get into their half-year financials for the half-year of 2020, the firm has, of course, seen a decline in terms of revenue. And one of the worrying issues that you find there is that they recorded a loss of 77 million Zimbabwean dollars over that very period. And of course, this is where we see the effects of the pandemic coming in there. Can you shed light in terms of your perspective where that aspect of the business is concerned?
Yeah, so much of the challenges that they faced in 2020 are to do with similar issues that hindered production in 2019. And this is constant breakdown in terms of equipment. Of course, power is improved, but they still faced challenges in terms of stabilizing their working capital in operations. So I think this is what affected it. Come in motor, the production levels were a bit higher, but at Renko there was that decline, in Muroa as well, that sharp decline in terms of gold production. So I think this to me is really a function of having to do with capitalizing its plant and also being affected by the vagaries around payments, which is a function of availability of foreign currency liquidity by the central bank. But I think it's also interesting now that retention levels have been increased for the general commodities, and obviously it means that it gives room for free market in terms of determination of the exchange rate. So I think as we move forward, we are likely to see improved production because miners are now getting full value from their produce and their submissions, especially to the Fidelity printers. So I think that might likely improve production because miners are getting full value and they're also quickly realizing flows from their exports. So I think it might also get to improve their prospects on the outlook. But in the half-year period, obviously they really suffered much given this set of challenges around production processes, derelict equipment, and also some challenges around the currency.
Respect, we're just going to take a break, and when we come back I want us to have a look at what Manit alluded to with reference to a new project that is actually in the pipeline. Stay with us. Thank you for staying with us. We're still discussing Rio Zim, one of the leading mining companies here in Zimbabwe, and I'm still on set with the chief analyst for Equity Access, Respect Kwenzi. Now, Respect, I want us to have a look at a piece of footage from the annual general meeting where Manette alludes to the BIOX plant, which could be a game changer in a way for the group. Let's have a look.
We went for a lockdown like the rest of the world in Q1 of 2020, and that obviously brought along a lot of problems, starting with supply chain issues. The borders were closed, and Zimbabwe doesn't manufacture most of the mining inputs and raw materials and consumables that are needed, and they are all imported. Because of the border problems the first problem we faced was on our supply chain. In terms of people, we were very proactive in making sure that we put in place very extensive prevention and precaution measures. And we did that very quickly in early March at all our locations at the head office and at all our mines. As a result, thankfully, we haven't had much problems in terms of infections. Yes, we've had a few, and very few, I must say. But by and large, we've managed to keep the spread of COVID under check. Going forward, just to talk about a few notable highlights of the year 2019. On the positive side, we managed to commence the multi-million-dollar BIOX project. The project was supported by loans, US dollar loans from our majority shareholder of up to $11 million. And we will see much more of the project as we go along in the slides. On the downside, and what made the year very difficult for the group, was that our biggest operation, Cam and Motor, ran out of oxidic material. What we are left with currently is sulfides, refractory ore, which our current plant cannot extract gold from. That is why we need the BIOX plant. The BIOX plant is already running in delays, as the shareholders will remember from the last AGM and also all the communications that the company has been doing with yourselves over the last 18 months, including half-yearly result announcements and everything. To manage our overheads, what we did is in the year 2019, we commissioned a small mine called One Step near the Cam plant. It is about 53 kilometers away. We had a little oxidic ore available at One Step, albeit at less than half the grade of the Cam ore. But that we thought will give us enough bandwidth to at least cover our overheads. That ore, before we started One Step, we always knew that ore was only enough to last for about a year or so, and hence the urgency of BIOX has been discussed in the past also with the shareholders. As we stand currently, the One Step ore, we have just a few more months left. We were expecting to commission the BIOX plant towards the end of this year. That obviously hasn't happened due to severe funding challenges that we faced to finance the BIOX project. We obviously need US dollars as all the equipment and services for this project come from overseas. And we've been trying to get US dollars through debt funding, and none of US dollar debt is available in Zimbabwe, sadly. We tried to raise capital through our shareholders. And as the shareholders will remember from the last AGM, the constraint was not having enough authorized share capital. So as a precursor to the US dollar rights issue, we had requested shareholders to allow us to increase our authorized share capital. However, certain shareholders declined that resolution, and that was basically, that route was not available. We continue to engage our shareholders, as that is the only possible source for us to get this capital and finish this critical BIOX project.
That, of course, was Manit there, giving us light into what the BIOX project is all about and how important it is for the group. But of course, respect, this is a project that is expected to bring some efficiencies and improve their output as well as processes in their mining operations at the chem and motor mining segment.
Yeah, sure. Yeah, I think that's the background, because obviously we're seeing that going biological means also going green, and this is in line with some international benchmarks that are being set, especially in line with climate change and so forth. But I think for them, the biggest benefits there are cost savings. It might not necessarily improve the production volumes, but it may cut down their cost significantly. But we are yet to determine and know the actual extent to which these costs are cut. But I think an investment of about upwards of 10 million or so, I think it should really bring us some real cost savings in terms of production. And this is a mining company which has struggled to really post profitability, and in a period where global prices are scaling up, I think when costs are compressed, it's quite obvious that your bottom line gets to also improve. So I do hope that prices keep on firm, and this project is completed sooner since funding has now been secured, so that we might see the cost savings coming into play and improve profitability margins.
Now, this is a firm that also owns over 22% in Muroa Diamonds, and their production output has been very much suffering 2019, even into the half year of 2020, where it has dipped from about 390 carats over the comparative period of 2019, moving down to 250 carats at this very juncture. Can you tell us about the significance of that, and perhaps how they could dig themselves out of this very quagmire?
Yeah, so the challenges at Muroa are also to do with a breakdown in equipment. This is one of the biggest challenges that they're facing in that unit. But I also think that as a country, we're not doing more to promote the production of diamond in this country. So they've really faced the brand of underinvestment, and they would do better by focusing on improving their production processes, just like what they ought to do in other areas. But I think one thing that I find that I don't seem to understand about the company is that it has been acquiring some new assets. But in that process, it has been underinvesting its existing mines. So you then get to wonder whether you'd realize more by increasing the number of let's suppose it's your mines, whereas you don't get to capacitate or to equip the existing plants, so that you get to also realize better profit margins. So it's really something that I often get to think about when I'm evaluating the prospects of this company going forward. They would do better by investing in existing capacity other than by expanding their portfolio without necessarily having enough capacity. I'm sure they're now also getting into gas very, very, very soon. They're partnering a Chinese company in terms of that. But all this it becomes of no significance if they don't get to improve on their processes so as to possibly get higher margins.
Talking about one of their other legs, you also have the Sengwa Coal Project, yes, where they own a 50% shareholding. Do you think that would create value for them in terms of power generation and so forth?
Yeah, that's the project that I was referring to. So yes, it has got some future long-term value, but to unlock value, you also need to invest. And they've struggled with a few mines. And this Sengwa project would require some real investment and in terms of capital outlay. And obviously, it stifles other units if you get to commit your few resources in that side when you have constantly breaking down mines. I think that they really have to seek funding from shareholders. They have to realign their processes and reconfigure these mines so that even their other acquisitions, they will also become as profitable as they project, because they will be adequately capitalized.
Well, thank you, Respect, for the insights. Thank you for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday, every Thursday, 7 p.m. Central African time on this very platform. Ibn Mabunda from Harare. This is Equity Access. Ciao.